Hey there, it's Will. I'm going to go through the markets again and some ETFs and things that you can look at. I've been doing this for a while, and you can see that here on my left side, I've got these I got a watch list for the various markets, and this is the pre-market right now. So in TC2000 software, you can see the pre-market 815, and you're seeing that it's down over here 1% for NASDAQ and 0.8% for the Dow Jones. And 0.8 for the SPY and about 1% for the IWM as of 8:15 this morning. I really like TC2000. I can see the pre-market data. If I go to 10 minutes, there's a gray area which shows the pre-market or post-market, and that's a nice feature. If you want to get a free trial or $25 off your subscription, you can check out the link in the description below the video for TC2000. If you've been watching my channel for a while, I've been talking about this downtrend here. I use a variety of things to show whether it's an uptrend, downtrend, but you've got lower highs. You can see here, you've hit a high and then a lower high down here. And it's a sort of a failure right at the 50-day moving average. It got a little bit above it. And then a big gap down when Powell talked about, or when the inflation number came out, that was this time here. So we're continuing that downtrend. And, there's always a chance at some point there'll be a bounce. And there's different things I look at to see when that might occur. And I can talk about that as well. But I've actually got some inverse ETFs that I bought. It's an idea. If you don't want to short things, you can do that as well. I'll show that in a bit. But if I just quickly look at each indices here, you can see that we're in this little downtrend. The other thing was, one of the spots that you could bounce was at this recent low here. The next one, there's different ones you could draw, but we've got a June low right here, which is a ways down yet. But there's other spots that have some support as well, which is we're right at that spot pretty much right now for the IWM. That's not the pre-market for the S&P. Same situation. You don't know what's going to happen. Like in the pre-market, it could change from the pros. Once you open up in the markets, it could go up again. But that's what it's doing right now, and it looks like it's continuing for the Dow Jones as well. And the VIX, you can see what happened here. It was slowly coming up, and it just popped up over the 50 on Friday. And you can see that the momentum is increasing. This is the price percent oscillator. It's similar to MACD, but it zeroes it out and allows you to compare different assets to each other. We're right at, it's a bit early, but in terms of, you can have a turnaround near the zero line, but we've crossed it with the price percent, but the moving average hasn't crossed yet. Sometimes it turns around before the moving average gets up there, but or this one here, like where it just slightly got over and came back down. So, but you can see like it was climbing, and then now we're above the 50. And so that's kind of the market stuff. From there, I usually go to US sectors. Again, this is a pre-market. So like these values are quite often a little bit crazy in the morning for some of the stuff. Like, then there's only a few small volume here. But one of the things that keeps going up is the 20+ year Treasury ETF, which is TBF. It's the opposite of TLT. It kind of goes up when the interest rates go up. And you can see we broke this high here just recently. But it's up there pretty good right now. So the question sometimes is whether it's going to continue. UUP is another one that represents the US dollar, and that is also going up. Has a little crazy candle here. If somebody buys in the pre-market, like and they buy this if somebody puts in a really crazy, sell, and somebody takes them up on that, you can get that. Or there can be bad data sometimes. Because like sometimes with the pre-market, especially an hour or more before, you don't get great you don't get a lot of values. The ETFs don't show the prices a lot of times, or they'll be negative. So like if I invert the change, percent change, you can sort. You can see Ethereum, that's already opened up and it's down because it was down on the weekend. That's one thing I wanted to point out. I'm going to flip over to TradingView. Because this shows the 24 hours a day, 24/7 Bitcoin. You can see that over the weekend we had that there was one white up candle, then we had a down black candle on Sunday, and then now it's down again. So this kind of these kind of candles here, it's sort of like a VIX 24/7. So when this goes down, it's usually it can be a sign that the markets were going to go down as well. So I saw that from Jim Bianco on Twitter. He's a financial analyst, and he mentioned that it was like the crypto is like a 24/7 VIX. So whatever happens on the weekend can be a foreshadowing of what's going to happen during the week. So when I saw it going down on Sunday, and then I figured, it's probably a bad sign. Even though the pre-market was doing pretty well, it was just up a little bit. That was a sign that the pre-market could be, that the markets could be bad today. So the other thing, while I'm here over on TradingView, if we look at the 10-year, which is I showed you the TBF, we're right at the peak of the top of the previous high. And you've had this really amazing run here. So, this is where things can reverse. You can top out, and that would mean the end of a short-term pullback in the markets, and it can mean, markets can start going up again. But Wednesday, there's Jerome Powell and stuff like that talking about the interest rates, and so expected rate rise is 0.75, and those types of situations are a bit risky for trading because you don't know what's going to happen. But you can see that like the US dollar is pretty strong. That's the US dollar to Canadian, or the UUP. So it's still going up. UUP is more of an index that represents the different, different, like the euro and all that. Like it's an index of different things. Up here, I've got the DXY, which is the dollar index, and that is at almost 110 right now. So we're doing pretty well here. We'll see if it keeps going up, but these are things that will affect which direction we're going. Oil's down, CL it continues to go down, and so does natural gas. And that's probably because with the recession expected, demand goes down quite a bit, and that'll affect stuff that you buy. So you can see like UGA is gasoline that had a bit of a rise, and now it's dropping again. XLE is the energy. Because the oil is going down, those ones will go down as well. And GBTC is a Bitcoin trust, and you can see that it's down in the pre-market almost 5%. So what I want to talk about is the inverse ETFs, and I mentioned that before. If you don't want to short stocks or do options, you can buy one-to-one index inversions, like inverse ETFs, or bear ETFs they're called, or you can get leveraged ones 2 or 3 times. But so for example, you got the ARK ETF inverse, which is up today 2%. You've got RWM, which is opposite of IWM, that's up 1%, which is what the markets are down right now. NASDAQ is PSQ, SH is for the S&P 500, DOG is for the Dow Jones. If you want to get Bitcoin, this is a Canadian one. It won't be showing in the pre-market, but biti.to, that's the inverse of Bitcoin. And obviously today it'll be up again because Bitcoin is down. So those are ones that I have. What else could you do? There's an inverse of the cannabis. In Canada, HMJI. There's a financial inverse, just of the financials, SEF. And like I mentioned, TBF is sort of the long-term interest rates, and they've been heading upwards. So these are things that you could look at in terms of inverse. And then, of course, you can use different things. Like you can use the volatility stops, the green ones, for selling if it turns red at the end of the day. The 8 EMA is this black line. This is a lot of times the prices will stay above the 8 EMA if you're relatively short-term day trader. You can get churned up and down when it's doing. And oh yeah, the other thing that goes along with this uptrend is a cross of the price percent oscillator. Usually above 0 is really strong. You can see up here, we're uptrend, but these crosses can be entry points, or you can wait until it hits the 0 line. Usually after a pullback is a good time to get in. So when you see this pulling down and then you have a candle like this, you would want to get in there. Same thing here. But even if you bought this candle, you'd have to wait for, and use this as a stop, these green volatility, so that you don't sell right there and then miss this whole thing. Even if you sell, you can get back in if it reverses. But these green volatility stops can help you sort of stay out of the, let the trade go. And you can decide if you want to use them 100% or a combination of those with moving averages like this. There's a 21 exponential as well. It just gives you more room, but there's more of a drop between, where you're at with the price and the moving average. So that's all I wanted to say today. So we're having a pullback as of 8:30, almost 8:30 in the morning. We'll see if that happens when the market opens. But these are times when you definitely, if you're going to buy something, if you're going to buy a stock or ETF that's going up, you want to make sure it's really strong and going against the general market. And that might be something like silver. I'm not sure how it's doing today, but like PSLV, it's down 1.3% today, but you can see how it's in a little bit of an uptrend here. And let's check out gold as well, and that's going down. So silver was little things like that. Sometimes they go against the trend, but when you see everything red, mostly, it's when you generally want to be out of the market or on the short side. So hope that helps, and we'll talk to you in the next video. Don't forget, you can get TC2000 a free trial or $25 off your purchase of your subscription in the link below the video. Talk to you guys later.